We welcome now a fund manager who has had success buying international value stocks. David Winters, CEO and founder of Wintergreen Advisers, manages the Wintergreen Fund, which is up 18% in the past year, far outperforming the S&P 500. And so far this year, the fund has outperformed 99% of its peers. David joins us now to discuss his strategy and to offer his stock picks. It's always good to have you on. Thank you so much.
Mark, great to see you.
Even in this economic climate, what is your strategy? These numbers are very impressive. What are you doing that perhaps your competitors are not?
Well, we believe there's a bright future, and we think there's lots of undervalued securities. And if you believe in doing the work, and there's certain things that people do every day, no matter what happens. They feed their pets.
What does that work entail? Are you talking specifically homework?
It goes back to that old style of doing your homework, going to visit companies, thinking about the underlying businesses. Management is so important. And then what do you pay? So we call it the trifecta. And there are these trifectas around the world that we think can make our investors good profits.
Still, great future, I have to say. I don't think I've heard anyone use that phrase in quite a long time. People might say, well, things aren't so bad as you think. And that's about as good as it gets. I mean, when you talk about bright future, are you saying for these specific companies? Are you looking sort of bigger picture as well?
Well, I think the Wintergreen portfolio, has a bright future, very much so. And I think even the world in general. I mean, when you travel around the world, and we were in Asia a couple months ago, there's a lot going on. And a lot of good things going on. And so I think you got to be optimistic about the future.
Talk to us about this strategy, because we're told that you have a flexible investment mandate. Am I to take that to mean that given current macro conditions that you're willing to pivot and go in another direction if need be?
Yes, sir. If things change or the evidence and the work says that we need to be doing something differently, we will change. We'll raise cash. We'll own different types of securities. Really what we're trying to do is be careful with our investors' capital and make it grow over time.
Now, one of the things that you're looking at, and not just at Asian economic growth, but you see actually something that's you see as relatively positive here in the U.S. And this is something that Adam and Dom on our markets desk have talked a little bit about, and that's railroad loads.
Yeah.
They're actually going up, which seems counterintuitive given a lot of the other economic data.
Well, railroad loadings, car loadings, is actually one of the best economic indicators. There are very few people who think about railroads. But the fact is that there are more car loadings this year over last year. And so that's a wonderful indicator of economic activity. And we think things are getting better.
Talk to us about why you are bullish on Asia. And I want to talk about that right before we get to the picks, but why?
Well, I think there's a couple billion people out there who want everything that we have.
Yeah.
And they're willing to work really hard to get it. And so part of what we're doing at Wintergreen is to figure out what can we own through a security portfolio that we can help facilitate this.
Well, one of the things they want is to be able to gamble, you could say. Genting is Berhad, if I'm saying that right, is one of the picks. This is one that we talked about a little bit last time. The only Malaysian casino owner. Now, of course, when you talk Asia, usually you're talking about Macau, if you're talking about gaming. And if you look at the valuation of Genting, it's actually gotten close and, in fact, exceeded some of its Macau competitors. Does that concern you a little bit that perhaps the big run that it's had might be running out of steam? It is at a 52-week high today as well.
Well, 3 months ago it wasn't.
Right.
And what's interesting, what Genting's done is they have the Malaysian assets, they have the duopoly in Singapore, they have the Philippine assets. We went to see all of these when we were in Asia. And they've just won the Racino here in New York City. So here you have a Malaysian company with one of the best balance sheets and one of the best operating histories that's coming into the U.S. and seeking opportunities.
How did they pull that rabbit out of the hat? Was it the $400 million check?
They had money. I think it's a really important thing now. They have the balance sheet, they have the management, and they have the ability to implement. And I think they're a very impressive company. It's just almost no one's ever heard of them.
So let's go from something sexy like gaming to something very unsexy, elevators and escalators,
Yes.
which, is, speaking of a pivot. A company that is called Schindler, which is a Swiss company that manufactures and installs things like elevators. you know, and it's an interesting play at a time when you think of construction and new infrastructure. Here in the U.S., of course, you had the stimulus, but overall, you think of that business as maybe slowing down. But that's not happening with Schindler?
Well, the ironic thing is that people oftentimes perceive something one way, and the reality is different. And even if construction has slowed down here in the States, they've just won a huge contract for the Chinese railways. They won a big contract in Chile. And a big part of their business is maintenance and upgrades. All of you at Bloomberg would be very unhappy if you had to walk up and down those 6 flights of stairs every day. So you've got to maintain the elevators. The company has a beautiful balance sheet. And it's a well-run company. And, you know, when you think about where the world ultimately is headed, it's more urban development. And so,
in our last 30 seconds, Nestle, you really like 5% organic growth. Why do you like this company so much?
You know, in this world, which is having such troubles, you've got Nestle that's growing organically. And they have chocolate bars with pricing power, pet food. People like their pets better than their relatives. And, you know, people spend, you know, lots of money on Fluffy. And they buy back stock. It has a 3% yield in Swiss francs.
Well, I mean, not everything's fantastic. The bottled water business at Nestle, just bottled water anywhere, has been on the wane a little bit. Are they making up for that kind of thing elsewhere?
Yes. And, you know, and they get this fantastic balance sheet. Lots of cash, more cash. So, you know, we like these companies that are just gross profits, royalty on getting richer.
And David, quickly, that double-digit growth in the emerging markets, up over 30%.
Yeah. And that 35% of the company is in emerging markets, growing to 45 over time.
All right, David, we're going to have to leave it there. David Winters, Wintergreen Advisers CEO. Thanks so much for coming in. We appreciate it. Good to see you. Thank you.